So, good morning to each one of you. Happy morning to each one of you. Thank you, Kajal Madam, for that detailed introduction. So, first of all, I would like to compliment each one of you for joining this particular program. Today is Sunday, weekly off. So, still you have joined in a very large number for this virtual session. So, that shows your commitment towards the profession to new learn new things. As we all are aware, the field of insolvency, the field of valuation, that is having a very, very wide coverage. And the need of the hour is to practically learn a new concept on a daily basis. So, in that, actually, this type of CEP program, which are actually regularly arranged by the Divya Jyot Valuation Foundation. So that will provide us a very a precious opportunity to share our experience with each other, to share our knowledge with each other, and in the process to upgrade ourselves. So uh, that is actually about today's session, and the topic which is given to me is on valuation reporting and documentation. So as you all will appreciate, the evaluation report, that is perhaps the most important document of entire evaluation assignment, entire evaluation estimation, because the evaluation report is a document through which actually the valuer will convey the professional judgment of valuation estimation arrived by him or her to the users of the evaluation report. So as we all are aware, there will be multiple users of the evaluation report, and based on the valuation report, the stakeholder may take high value decision, like if the assignment is for valuation of land and building. So based on that, probably the banks or financial institution, they may provide finance to the borrower, and that may be of high value. So in that direction, the communication is very important. Effective communication, efficient communication, that is very, very important. And evaluation report, so that will play a significant role in that. So with that brief background, let me share my PPT. So just give me a minute, and I will share my PPT in just 1 minute. So Kajal madam, are you there? I do not have the screen sharing right, madam. Any organizer from Divya Jyot Valuation Foundation?
Sir, yeah, I'm giving. Wait a minute, sir.
Yeah,
Yeah, sir, now you can share.
just a minute. Yes, now it's there. I hope my PPT is visible to each one of you. If you face any issues in visibility of my PPT, please inform me anytime. That is number one. Number two, my sincere request to each one of you, please make this session as interactive session, a knowledge sharing session. We all are professional, and we learn from each other practically every day. So in that actually connection, the interactive and knowledge sharing session, that will be in our mutual interest. So IVS 106, documentation and reporting, that is a valuation report including a case study. So that will be actually the topic of discussion today. And we all know in the recent past, the international evaluation standard that have been revised. So to be precise, on 31st of January 2024, the revised version of international evaluation standard, that is notified, that is published by the IVSC, that is International Valuation Standard Council. And you all know these new standards that will be made effective mandatorily, compulsorily from 31st of January 2025. So 1 year timeline is given for implementation of the revised general standard mandatorily. But question will come, what about the current period, the period between 31st of January 2024 and 31st of January 2025. So during this period, the valuer have a two choice. Number one, either to follow the general standard as per IVS 31st of January 2022 version, or to follow the revised standard. So these two alternatives, these two choice are available to the registered valuer at present during current time period between 31st of January 2024 and the period and 31st of January 2025. Now, what are the changes? So, you all may be aware by now. You must have downloaded the revised version of General Standard. Actually, the major change is about incorporation of two additional General Standard. Incorporation of two additional General Standard. So, as per old standards, old version of IVS, we have five General Standard. IVS 31st of January 2022, you will find a five general standard between IVS 101 and IVS 105. New general standard. So you have seven general standard, and that are renumbered now between IVS 100 and IVS 106. So we have seven general standard. So that is the major amendment. IVS 101, so that is on a valuation framework. Earlier, this valuation framework was provided, but that was as introductory a portion of the IVS. But now that has been formalized as a general standard. So IVS 100 evaluation framework. Then we have the IVS 101 scope of work, very important because based on a scope of work finalized with the client, entire evaluation estimation will be arrived at. IVS 102 basis of value. So a basis of value, as its name suggests, that is the base of valuation. That is the foundation of valuation. Those of you who are from land and building asset class, you will appreciate the importance of a foundation structure in a building. If a foundation is strong, entire building will get strength out of that. So same way, if your choice of basis of value is appropriate to the scope of work finalized, appropriate to the purpose of valuation, so that will provide authenticity to the final estimate of value. So selection of basis of value, the choice of basis of value, that is of uh, prime importance in any type of valuation assignment. Basis of value, we know it as a standard of value also. So whether it is standard of value or basis of value, very important. And as we all are aware, there are six bases of value which are prescribed under the IVS and defined also. Six bases of value like market value, the market rent, the investment value or worth, the synergistic value, the liquidation value, the equitable value. So these are six bases of value which are defined under the international evaluation standard. And apart from that, there are additional basis of value like a fair value as per IFRS or Ind AS, or the fair market value as per OECD. OECD stands for Organization of Economic Cooperation and Development. Then fair market value as per USIRS, IRS stands for Internal Revenue Service. So in India, we have Income Tax Department. In USA, they call it as Internal Revenue Service. So they have also provided the meaning of fair market value, which is widely used for taxation purpose in USA and in many other countries. So these are the additional basis of value. Valuation approaches. So we all know by now there are three valuation approaches which are globally recognized. The market approach, the income approach, the cost approach. So whether you do a valuation in India or in USA or in any of the European country, any of the Asian country, any of the African country, anywhere in the world, ultimately the evaluation that will be based on three approaches of evaluation. Same way, whether you do valuation of land and building or plant and machinery or securities or financial asset, ultimately a valuation that will be based on three approaches of valuation. Any purpose of valuation, like for financing or for mergers and acquisition, for litigation, any purpose, again, the valuation that will be based on three approaches of valuation. And under these three approaches of valuation, we have multiple methods of valuation, and then a data and inputs. So that is a very, very important. And under a data and inputs, now actually the consideration of ESG factor, environmental, social, and governance factor. So consideration of that is now mandatory. That is now a compulsory once you implement the revised version of the international evaluation standard. So consideration of ESG factor in today's era of climate change, that is or the social unrest or the internal control issue or the transparency issue. So that is not left to the choice of valuer. That is not voluntary in nature, and that is now compulsory. That is now mandatory once you implement the revised general standard. So we will go through this consideration and then evaluation model. So you may be aware if you have gone through this revised version of IVS. Now actually the use of automated evaluation model, that is now formally recognized under the IVS. So we are living in the era of automation. All our tasks, whether that is related to the HR function or finance function, auditing. So everything is getting automated now. So same way, valuation, actually use of automated valuation model was there from a very long time now, but that has been formally recognized in IVS now. So how, what is the meaning of automated valuation model? What are the responsibilities of valuer? And evaluation is performed with the assistance of automated evaluation model. So a guidance on that is provided within the revised international evaluation standard. And finally, our today's topic of discussion, IBS 106. So a documentation and a reporting. So that is our today's topic of discussion. So that these are the new general standard. So very important. Many actually you may have a question why we call it as IBS 106, because earlier old version, the guidance on valuation reporting, that was part of IBS 103 and not IBS 106. So we will go through the revised guidance on the valuation reporting and the documentation. So that is number one. Number two, many times questions have been asked, if I am getting an evaluation assignment, what order of activity I need to follow, what order of activity I need to follow. Whether I should first finalize the valuation approach and then a basis of value, or whether I can arrive, collect the document inputs and then finalize the evaluation approaches. So probably a logical answer to that is provided in the new general standard. So this is the order of activity we need to follow in all our evaluation assignment. All our evaluation assignment. So our any evaluation assignment will commence with valuation framework, finalization of the valuation framework, going through the guidance on valuation framework, then finalization of scope of work, choice of basis of value, a choice of valuation approach and method, data and input, collection of data and input required for evaluation, then use of valuation model, whether that is automated or a manual valuation model, and finally the preparation of document and finalization of the evaluation reporting and a retention of the valuation document. So that is the order of activity we need to follow in any type of valuation assignment. Now, talking about the asset, so asset standard. So as we all are aware, there is no major change in asset standard. So that has remained eight only. So as per old also, we had eight asset standard, and as per new also, we have eight asset standard. But change is earlier IVS 300. So as we all are aware, asset standard, these are between IVS 200 and IVS 500. So between IVS 200 and IVS 500, we have eight asset standard. So IVS 300, that is on a plant and equipment. So earlier it was plant and equipment, but now that is plant, equipment, and infrastructure. So as we all are aware, infrastructure development, that is of prime importance in today's world. The government is spending a lot of money on that. So how to do valuation of an infrastructure project, that now you will get from the revised version of the international evaluations. Similarly, IBS 500, which is on a financial instrument, so that is now completely a rewritten, comprehensively revised. So those of us who are from SFA evaluation class, securities or financial asset, so very important to go through the revised guidance on the financial instrument. Now, understanding the essentials of a evaluation report. So very important. What actually factors we need to consider when actually we are preparing a evaluation report. Very important. Valuation report is not a copy paste of the earlier document. Even actually, we have completed evaluation of land and building. Second, land and building valuation assignment. We need to rewrite the complete evaluation report. Rewrite only a few components of the valuation report. These are standardized. Otherwise, by and large, each and every component of the valuation report that will undergo change for each assignment based on the scope of work finalized, based on the asset class, based on the means purpose of valuation. So that need to be changed completely, rewritten completely. So what essential factor we need to consider when we are writing a evaluation report? So that actually start with the definition. What is the meaning of valuation report? So as we all are aware, that is the comprehensive document, consolidated document that provide the estimated value of a particular asset, whether that asset is a business or business interest, tangible asset, intangible asset, financial asset, or property, whatever name we may call it. So that is comprehensive document. When we are talking about the comprehensive document, so that document need to provide all details related to that evaluation to the users of the evaluation report, to the readers of the evaluation report in a very, very easy to understand language. We may be actually, we all are professional in the field of valuation. We may be familiar with the technical terminology which is used in the evaluation, but don't expect that readers of the valuation report that will be familiar with a technical jargon which is used in the field of valuation. So very important, simple word, use of simple language, easy to understand language, that is of prime importance. Second thing, what is the purpose of valuation? Purpose of valuation will determine the estimated value. Like you are doing the valuation for liquidation, when you are doing the evaluation for winding up of a company, or for dissolution of a company. So consideration there will be totally different when you are doing evaluation for purpose of financing, purpose of borrowing, or that will be totally different when you are doing valuation for mergers and acquisition transactions. So very important, purpose of valuation that will determine the format of the evaluation report. So a SAV to inform a stakeholder like investor, owners, potential buyer about the value of asset based on a systematic assessment. Based on a systematic assessment. What are the key component of a evaluation report? What details we need to incorporate? So detailed a description of the asset, the context of valuation, the methodology used for valuation, the final valuation conclusion. So these are the key considerations. This list is not exhaustive. This is for illustration purpose only. Use cases, so used in scenario like mergers and acquisition, financial reporting, litigation support, strategic planning. So these are the purpose of valuation for which we need to prepare a valuation report. And a professional standard. So very important, adherence to the established valuation standard and guideline to ensure the accreditability and accuracy. You all are aware, there are two types of valuation assignment. Number one, a principle-based evaluation. A principle-based evaluation. Number two, a rule-based evaluation. So whenever you are doing the principle-based valuation, very important to comply with the valuation standard. So whether that is international valuation standard or ICAI evaluation standard. So as we all are aware, in India, the Institute of Chartered Accountant of India, they have published the ICAI evaluation standards. So wherever you are doing the first type of valuation, principle based, so that will be based on the IVS or ICAI evaluation standard, and there the valuer will get more flexibility in arriving at the judgment of evaluation estimate. And a rule based evaluation. So if you take example like you are doing the valuation as per the provisions of income tax act, rule 11 UA of the income tax rule. So necessarily you need to follow the methodology which is prescribed under the rule 11 UA of the income tax rule, like NAV method. When you are doing evaluation as per IBC, CIRP process or liquidation process or voluntary liquidation, so you need to follow the guideline provided under the IBC, Insolvency and Bankruptcy Code. Similarly, when you are doing evaluation for FEMA, so you need to follow FEMA guideline, Foreign Exchange Management Act. So that is rule based. And there a valuer will get less flexibility, because rule-based valuation, these are prescriptive in nature. Prescriptive in nature. So prescriptive in nature means you necessarily need to follow the methodology which is prescribed under the statutory provision. That is the rule, that is the law of the land. So you have no other option but to follow that statutory provision. Like if you take our personal example, like if we feel sick, so it is rainy season now. So if you feel sick, what you will do, you will go to a doctor, and doctor, after going through the case history, will provide you a prescription. Doctor will prescribe certain medicines, and you have no other alternative but to follow that prescription, take medicines as advised. So this is also a prescriptive in nature, rule-based valuation. You do not have any other option but to follow the methodology provided under those rules. Many times we feel actually what method we have followed, that may not be in order as per the ground reality, as per the circumstances, but you do not have any other choice when you are doing a rule-based evaluation. So that is regulatory, that is actually professional standard. Then objective analysis, provide an objective analysis that support the business decision, negotiation, or a compliance requirement. So compliance requirement, valuation under Ind AS, Indian Accounting Standard, for the purpose of financial reporting. Negotiation, major purchase and sale transaction, mergers and acquisition transaction. Business decision, so that may be for the purpose of acquisition, for a purchase of asset. So all these are objective analysis, which is part of valuation report. Transparency and accountability, we all know the importance of transparency and accountability, following the code of conduct, which is part of annexure 1 of the company's registered valuer and valuation. So we do not have any other choice but to follow the code of conduct, and transparency and accountability. These are a part of our code of conduct. And regulatory compliance, so legal and a regulatory requirement, we actually discussed about a regulatory requirement. So these are the essentials of a evaluation report. And these are the important characteristics of a evaluation report. Clarity and objectivity. So evaluation report need to present information clearly and maintain an unbiased perspective. The priority of the client will always be different. Many times actually client may need the valuation for the purpose of borrowing, and their client may actually require a very high valuation of its property, high value than as compared to the market value of that property. But as a valuer, we need to have actually the unbiased perspective in all the evaluation assignment. Transparency and disclosure, we discussed about that. Detailed methodology, what methodology we have followed in evaluation, we need to explain that in the evaluation. Compliance with the standard, we discussed with that. And so these are the important characteristic of the evaluation. So now coming to the format and contents of the evaluation report. So as we already discussed, there is no prescribed format of the evaluation report. You will not find a prescribed format of the evaluation report under the International Evaluation Standard, under the ICAI Evaluation Standard, under the European Evaluation Standard, under the US appraisal standard, under the valuation guideline published by Royal Institute of Chartered Institute, Royal Institute of Chartered Surveyor, London, UK. So what I am trying to highlight, you will not find format, prescribed format of the evaluation report under any documents, under any documents. So that comes about the contents of the valuation. So what the contents of the evaluation report need to be incorporated in a evaluation report. So guidance on that is provided under the multiple documents. Guidance on that is provided under the multiple documents. So very important form and contents of the evaluation report that will depend on the nature of engagement, whether your engagement is related to detailed evaluation assignment or review assignment, and the purpose of valuation. So what is the purpose? Borrowing purpose, mergers and acquisition, litigation. So that will depend on the purpose of valuation. So form and contents of the valuation, there is no prescribed format. Contents of valuation that will depend on nature of the engagement and the purpose of valuation. Now, if you have gone through the guidance provided under IVS 106, so you will find what contents need to be incorporated in a evaluation report. So that guidance is now provided in a very, very detailed manner as compared to what is provided under the old standard, that is IVS 103. So these are actually I have taken from the IVS 106. Valuation report must convey. So this is actually the compulsory in nature, mandatory in nature. Valuer is under compulsion to convey this detail. That is not left to the wisdom of the valuer. That is not left to the choice of valuer. That is not voluntary in nature. So very important. A valuation report must convey the following at a minimum. So that is again a very important. These are the minimum detail. So this list is illustrative in nature. This list is not exhaustive in nature. So apart from these details, based on the ground reality of each assignment, you need to incorporate additional details apart from what is highlighted under IBS 106. So that is about the requirement of details to be incorporated in a evaluation report. So number one, agreed scope of the work. Agreed scope of the work. So let us go to the agreed scope of the work first. We will go through one by one each of the component. These are very, very important. So my effort is actually to cover whatever we are going to cover in this limited time of 2 hours. So that I will cover in a detailed manner. So I will not just run through. Maybe it will remain incomplete. Maybe we will cover that some other time if you found that useful. But whatever we are going to cover, that will actually in a very, very detailed manner. So let me take you there. Number one. So we will start with the roles and responsibility in issuing and accepting a key communication for evaluation engagement. For evaluation engagement. So these are the document which actually we try to preserve for a very, very long time. We try to formalize this document before starting of the assignment or during the assignment or at the end of the assignment, and try to keep it for a very, very long duration, at least for the statutory period which is mentioned for retention of the document. So number one, engagement letter, very important. As we all are aware, engagement letter that is issued by the valuer and that is accepted by the client. That is accepted by the client in writing. So nothing in evaluation assignment should be verbal. No communication in evaluation assignment need to be verbal. That need to be in writing also. So engagement letter issued by the valuer, accepted by the client. So what contents of the engagement letter? So valuer prepare and issue the engagement letter after discussing the scope and terms with the client. So in that, the valuer is expected to highlight the detailed methodology, the detailed process of entire evaluation assignment. And once that is accepted by the client, so there will remain no communication gap at a later date. So very important, a valuer will prepare and issue the engagement letter after discussing the scope and terms with the client, and client will review, sign and return the engagement letter, formally agreeing to the terms and scope of the work. So if in engagement letter I have mentioned that I will follow the market approach for evaluation, and once that is accepted by the client, so client at a later date will not be in a position to tell me why you have not followed the income approach for evaluation, or why you have not gone by the cost approach of valuation, or why you have not followed a certain methodology under the market approach. So that actually communication gap will not remain. So very important, engagement letter issued by the valuer, accepted by the client. Appointment letter, so as we all are aware, that will provide the primary terms and conditions related to the evaluation. That is the document number one, which is issued by the client and accepted by the evaluer. Appointment letter issued by the client and accepted by the evaluer. So a client will issue the appointment letter to formally engage or appoint the evaluer service, and evaluer will review the term, sign and return the letter to confirm acceptance of the appointment or engagement or assignment, or whatever name we may call it. So that is the second document related to valuation assignment, for very important for finalization of the scope of work. The third letter, that is the management representation letter. Management representation letter, very important, that is prepared by the client, that is issued by the client, and that is accepted by the evaluer. That is accepted by the evaluer. So client will prepare the and issue the management representation letter confirming the accuracy and completeness of the information provided to the evaluer. So for example, the land is leasehold land, or ownership, a freehold land, or a title of the document, the projection related to valuation, all those details will be provided through management representation letter by the client to the valuer in a writing. So that is a very, very important management representation letter, and that will be accepted by the valuer. So valuer will review the representation and may request additional detail or clarification if necessary, and valuer typically will retain a copy of the signed letter in their record. So actually, you have collected like the title document of the property. Now, title document, you may require additional detail, like if a valuer, if the client has provided you with the sale deed, at times you may require a copy of agreement to sell, which is executed between the builder and the client. So that document, that client should not provide that verbally, or without actually forward letter in a writing. So a management representation letter, whatever document, whatever information, whatever input, whatever projection you get from the client, that should be recorded. So that is a management representation letter. These three documents are very important and compulsory in nature. So at least you should have these three documents in any type of valuation assignment. Apart from this, actually, if the evaluations are a very high value evaluation, So on need basis, you may have actually a document related to assumption and a spatial assumption. So that is prepared by the valuer and reviewed and accepted by the client. So valuer will document any assumption or a spatial assumption that are essential for the evaluation, and client will review this assumption, agrees to them, and confirms understanding as part of the engagement process. So if I give you a one example, like a commercial building is under the advanced level of completion. So that construction is expected to be completed in no time from the negotiation about the evaluation, from the date of negotiation for evaluation assignment, and a client is expected to receive the building occupancy certificate or a BU permission from the local authority in a very short period. So under that, actually, client may insist ki actually you assume that this building is means completed, construction of this building is completed, and I have received all the permission from the local authority which are needed for occupancy of that building. So keeping that into consideration, you actually arrive at the value of this commercial building. So that is assumption, that is the assumption which you are making in evaluation, and that need to be recorded. That should not be a verbal communication. That assumption need to be recorded. So that is just one example I am giving you. So the valuer will document any assumption or special assumption that are essential for the valuer, and that will be accepted by the client. Final valuation report. So a valuer will issue that, and the client will review the final report and use it for the intended purpose as agreed upon in the engagement. Confidentiality agreement, we all know that either a valuer or client will need the confidentiality agreement. So wherever needed, that need to be provided. So that these are the key communication, key documents which are issued as a part of the evaluation. Now, agreed scope of work. So that is our first topic of discussion, agreed scope of work. So purpose and objective of the evaluer. So clearly state the evaluation purpose and the intended use, and identify the intended users of the evaluation report. This very, very important, intended users of the evaluation report. So this reminds me of one example. We all know what happened to Kingfisher Airline. Kingfisher Airline. So Kingfisher Airline that commenced its commercial operation in India somewhere in 2006, and then closed down operation in 2012 due to non-payment of dues to the creditors of the company. So actually after a failure of Kingfisher, as we all are aware, a substantial amount of bank loan that remain unpaid. Substantial, very high amount of bank loan that remain unpaid. And probably for the first and last time in India, till today, banks had provided a finance based on the brand equity of the Kingfisher Airline, or brand equity, intangible asset of the Kingfisher Airline. Very high valuation of the brand name of the Kingfisher Airline. Now you will appreciate that when company fails, what will be the brand value of that company. When company is closing down, their brand value will actually come down practically to very negligible amount. So in that case, actually, the investigations were made by the agencies like CBI and all. So all these are in a public domain. You can very well go through that on internet. So when actually matter reached to investigating authority like CBI and all, so they question actually the bank, the evaluation firms, the evaluer firm, which was a prominent global evaluation firm, as to how you have attached such a high value to the brand equity of Kingfisher Airline. So they at that time, that representative of that valuation firm, they openly told our valuation was for the internal consumption of the management. That was not meant for providing finance. The users of our evaluation report, that was never expected to be the banks and a financial institution. So we have clearly mentioned the purpose of valuation. We have clearly defined the users of the valuation report in our evaluation, and that argument was so very important. You mentioned the purpose and intended users of the report. And basis of value are very important. Specified the agreed basis of value like market value and ensure alignment with the evaluation purpose. So this actually I am highlighting what you need to actually provide in evaluation report as part of the scope of work. Then list explicit and a special assumption, disclose all assumptions in the report, and then extent of investigation and a limitation. So define the investigation scope and any limitation which is agreed to as part of finalization of the scope of work, and discuss the impact on evaluation report. The time frame for a completion, so outline the agreed timeline and key milestone, and compliance with the relevant standard. So scope of work, finalization scope of work may affirm that IVS 106 and local regulatory compliance, confidentiality and data use, deliverables and approval and acceptance. So ensure client acknowledgement and process for a scope of work. So these are the essential component of the documentation. So that is our part number one. That is our part number one. And now we will go where we left. So now we will go where we left. So asset and liabilities being reviewed. So we need to clearly specify which are the asset which are being reviewed. So as we all are aware, there are 8 asset class under the IVS. So a business and business interest, that is IVS 200, then intangible asset IVS 210, inventory IVS 220. So whatever may be the asset class that we need to specify clearly. Sorry, this review assignment. So let me take you here. So asset or a liability being valued, so that we need to clearly specify. There are 8 asset class. Then identity of the valuer, very important. Identity of the valuer, credentials of the valuer, our registration details with the IBBI. So that we need to specify. Then a client, so details of client with whom we have reached an agreement, intended use and intended users, so that we discussed about that. A valuation currency, so normally actually Indian rupee will be the valuation currency in majority of our assignment. But if a valuation assignment happens to be for a foreign company, so we need to specifically mention the valuation currency, whether that is British pound or whether that is a US dollar, whatever that may be. Then a valuation date, very important. A valuation report is valid, or the valuation estimate, whatever we have arrived at, that is valid only on the valuation date, as per the circumstances of the valuer, as per the ground reality which prevailed on the valuation date. So that estimate is arrived based on those ground reality. Many times questions have been asked, what is the validity of the evaluation report? So very important to consider the validity of a evaluation report that is on the evaluation date, not one day before the evaluation date, not one day after the evaluation date. Because we all know we are living in the most uncertain time. The geopolitical situation, as we all are aware, that is very, very tense. We have two ongoing war between Russia and Ukraine and Hamas and Israel. Very, very uncertain situation. Tomorrow, what will happen, nobody knows. So under that, the validity of the valuation report, that is as per the valuation ground reality on the valuation date. So that is very important, and we need to make a suitable coverage of that in the valuation report. Now, basis of value adopted, a basis of value adopted. So that is, we discussed there are six bases of value. Now, actually, you will say all this is theory. We need the practical approach. So what I will do, I will stop sharing this and I will take you through. Supposing we will assume a hypothetical scenario where we are doing the evaluation of a land and building asset class, valuation under plant and machinery, and valuation under SFA. So how actually the basis of value will be adopted, what tax we will actually incorporate in the evaluation report related to this particular area. So that I will actually highlight. So I will stop sharing this. Just give me a minute and I will come out with my Word file. So I hope my this screen is visible. Now, actually, this valuation, we will assume that that is for commercial property, and that is actually a transaction is a purchase and a sale transaction or a transfer of property. So under that, actually, we will how we will make the tax in the valuation report. So actually, this is the basis of value. As I informed you, there are six bases of value which are recognized under the international evaluation standard. So these six bases, you all are aware: market value, market rent, investment value, equitable value, synergistic value, and the liquidation value. So these are the six bases of value. You need to select one from these bases of value. So here actually, when you are doing the valuation of a commercial building for the purpose of purchase and sale transaction, for the purpose of transfer of asset, so how you will determine the basis of value and how you will provide justification for that. So a market value, the basis of value adopted for the evaluation of the subject commercial property, that is the market value as defined by the international evaluation standard. So what is the definition of market value? So that actually this is the meaning of market value provided under the IVS. So what is the meaning? Market value is the estimated amount for which an asset or a liability should exchange on the evaluation date between a willing buyer and a willing seller in arm's length transaction. What is arm's length transaction? That is the transaction between two unrelated party. That is the transaction between two unrelated party. So when you are determining the market value, you will appreciate that you will not take a transaction which is between two unrelated party, because between two a related party, because related party transaction will always have certain amount of concession, certain amount of discussion. So that cannot be the a benchmark, that cannot be the basis for estimating the value of another property. So very important, arm's length transaction after proper marketing, wherein the parties had each acted knowledgeably, prudently, and without compulsion. So that is the meaning of market value, which is provided under the international valuation standard. This meaning is provided in a very, very detailed manner, a very, very detailed manner. So if you are interested to know what is the meaning of estimated amount, or what is the meaning of valuation date, what is the meaning of willing buyer, what is the meaning of willing seller, what is the meaning of arm's length transaction. So my suggestion to you is go through the guidance which is provided under IVS 103. IVS 103. So that each of this terminology, each of this word, meaning of that is provided in a very, very detailed manner under the international evaluation standard. So go through that. Market value, that is the estimated amount for which an asset or liability should exchange on between a willing buyer and a willing seller, and in arm's length transaction after a proper marketing, wherein the parties had each acted knowledgeably, prudently, and without compulsion. What is the relevance of the market value? So selection of market value is particularly relevant for the subject property, given its location in a prime area of so and so a city, which is known for high demand and a limited supply of commercial real estate. And a market value will reflect most probable price that would be achieved under the current market condition, assuming the property is exposed to the market for a reasonable period. So that is the assumption you are making. Property is exposed to the market for a reasonable period. So what are the challenges in obtaining a comparable transaction data? As you all are aware, market approach, that is based on a relative approach of valuation, that is based on comparables, that is based on multiples. And market approach, you all may be aware, that is based on the fundamental economic principle of price equilibrium, of price equilibrium, the fundamental economic principle or the theory of price equilibrium. What is the theory of price equilibrium? So that highlight that price of any asset or price of any good or price of any service, that is determined by the forces of a market, that is demand and supply. So if demand of a property or a demand of asset or demand of good or demand of service, that is high, so naturally that will have high value, that will have high price. So that is the theory of a price equilibrium. Price will be in a consideration of supply and demand. That these are the forces very important in market approach. So market approach always you will come across challenge of getting the identical property, or the similar property, or a property which is matching on 100% parameter. To be on a lighter side, in our personal life also, in our real life, we always will have a complaint our match is not 100%. Whatever we have, that is not 100% matching with our requirement, our nature, our characteristics. So that will be true in valuation also, you will not come across a property which is 100% matching with another property. Each real property that will be unique, that will be different. As we natural person, we all are unique. We have a different nature, so that will away with the property also. So that actually, whether you are doing valuation of land and building or SFA or plant and machinery, getting comparable, getting means multiple similar or identical asset or property or plant and machinery, whatever name you may call it, that will always be a challenge. So challenges in obtaining comparable transaction data. During the evaluation process, a key challenge was encountered in obtaining details of recently concluded transaction for identical or similar commercial property within the vicinity of the subject property. So that is how you do the valuation. Supposing if you intend to sell your house, so how you will determine the estimated value of your house? So that will be based on a similar type of house in the same area of which you have the details of a recently concluded transaction. So that is what we do in valuation also. So during evaluation, key challenge was encountered in obtaining details of recently concluded transaction for identical or a similar commercial property within the vicinity of the subject property. And what are the primary reason for that? So primary reason for this difficulty. These are limited availability of comparable sales. So subject property is located in a highly sought after area where commercial property transactions are infrequent. Many times we come across this in our real life also. Commercial property transactions are infrequent due to the long-term holding strategy of the current owner. Confidentiality and non-disclosure. So we all know very difficult to get the actual information about a property transaction. We all know how property transactions are settled. What is reflected in the sale deed that may not perhaps give the market value of that property. Confidentiality and non-disclosure. In cases where transactions have occurred, so details are often subject to confidentiality agreement, limiting access to a complete and a verifiable information. So this is the limit we need to highlight in our evaluation report, because property transaction, particularly in India or in anywhere in the world, we will come across this limitation. Very difficult to get the details of a transaction of actually executed transaction. So that always will remain a challenge, and that need to be properly highlighted in the valuation report. So unless we highlight, that will not come to our defense at a later date if unfortunately the valuation report is challenged. So in case where transactions have occurred, details are often subject to confidentiality agreement, limiting access to complete and verifiable information. Approach and consideration. So despite the challenges, so challenges will always be there, and our task is to overcome the challenges. So how we have overcome the challenges, that we need to describe. So despite the challenges in obtaining a direct comparable, the evaluation was carried out by considering the following factor. So number one, market trend and economic indicator. So analysis of broader market trend within a so and so commercial real estate market, including recent changes in demand, supply constraint, and overall economic conditions. So, like for example, you are talking about Ahmedabad, supposing Ahmedabad, Gujarat. So, Ahmedabad, Gujarat, what is the trend of new projects in a commercial building? So, probably that will give you an idea about the demand of the commercial property. and that may also give you an idea about the estimated value. Now, many reputed builder they actually take 100% cash. So you can also go to that builder's office as a client, and you actually negotiate for a purchase of a commercial property. And in the process, you may come across the price of that property. So that these are the indirect way of ascertaining the estimated value. So market trend and economic indicator analysis of broader market trend within the so and so commercial real estate market, including recent changes in demand, supply constraint, and overall economic condition. Adjustment based on availability of data. So where a recent transaction data was available, adjustment were made for differences in location, size, condition, and other relevant factor to estimate the value of subject property. So these are the consideration for adjustment, location of the property. Even actually, you may come across to a property. So if we take example, supposing one commercial building, two buyers, they have purchased exactly same type of office building on the same floor of the same building, and it may happen that after a 5 year, the value of one property is 5 times more as compared to the second property. So how that is possible? That is possible because one property is available for disposal with the vacant possession. Another property, so that is occupied by the tenant for a 5 year since the beginning of completion of construction, and that tenant is not ready to vacate that building despite best efforts by the owner. So same, everything is same, building is same, floor is same, area of the office building same, purchased on the same period, but it may happen that the office building with vacant possession may fetch much more as compared to office which is occupied by the tenant. So all this consideration based on the available data we need to make in evaluation. So location, size, condition, other relevant factor to estimate the value of subject property. And consultation with market participant. So insight were gathered from discussion with real estate broker, developer, and other market participant who have a recent experience in the area, providing additional context for the evaluation. And conclusion. So based on the analysis of the factor mentioned above, market value reflects the best available market evidence and professional judgment, notwithstanding the challenges in obtaining direct comparable transaction data, and the approach is taken is consistent with the requirement of IVS and reflects the valuer's consideration of all relevant market factors. So that is actually, I have just suggested the text of which we need to incorporate related to these basis of value adopted, land and building. So that is relevant for market value only. As we discussed, there are six bases of value which are a part of IVS, and apart from that, there are additional basis of value which are specified. So a basis of value, the ground reality, the purpose of valuation, that will determine. So this I have highlighted is just for a representation purpose. This is just for knowledge sharing, how to actually deal with the situation practically when we come across. So that was for a land and building. Now we will go for a plant and machinery. So this particular session is for all asset class. So we will go one by one. So plant and machinery, here actually we have taken equitable value. So that is second basis of value. Equitable value, as we all are aware, that is considered as basis of value in mergers and acquisition transaction. Mergers and acquisition transaction. So a very important. So here actually we have hypothetically assume transaction is related to mergers and acquisition. These transactions are very high value transaction. We all will appreciate that. And the basis of value, so that is equitable value. Now, when you are talking about mergers and acquisition, we cannot take liquidation value as the basis of value. We cannot take market value as the basis of value. So we cannot take market rent as the basis of value, because market rent we will take when transaction is related to lease of a property, leasing of the property. So very important to select. I will again repeat a basis of value, that is the foundation, that is the framework, basic framework under which we do the evaluation. So equitable value, the basis of value adopted for evaluation of the specialized plant and machinery. So we all know the today's era is of automation, and each industry, even within industry, each company may have actually a specialized plant and machinery. So what, for example, what plant and machinery that Reliance refinery at Jamnagar is having, that is totally different from the plant and machinery which is employed or deployed or commissioned in the Gujarat refinery at Baroda of the Indian Oil Corporation. Because Baroda refinery, Gujarat refinery, that was commissioned somewhere in 1960s, whereas Reliance refinery at Jamnagar, so that is commissioned somewhere in 1996, 1997. So you will appreciate that due to this time gap, the plant and machinery of these two companies, although they are in the same process, that is refining of crude oil, but plant and machinery will be different. So each company, each industry, each sector, that will have specialized plant and machinery, and that is the challenge for plant and machinery valuer. So equitable value, the basis of value adopted for evaluation of specialized plant and machinery, that is the equitable value as defined by the international evaluation standard. So what is the meaning of equitable value as per IVS? So that is highlighted here. Equitable value, that is the estimated price for transfer of an asset or liability between identified knowledgeable and willing party that reflect the respective interest of those parties. So here remember, when we are determining the market value, parties are not identifiable. Who will actually enter into that transaction, that is not identified at the time of valuation. But when you are determining the equitable value, the parties are identified. So supposing amalgamation between HDFC and HDFC Bank. So you are actually arriving at the exchange ratio of equity share between the shareholders of HDFC and HDFC Bank as part of settlement of the purchase consideration. So their parties are already identified. At the time of valuation, parties are already identified. These are the shareholder of HDFC and HDFC Bank. So that is the main difference between market value and the equitable value. And once parties are identified, you can have more a professional judgment. You can have more a consideration as part of your evaluation assignment. So equitable value, that is the estimated price for the transfer of an asset or a liability between identified knowledgeable willing parties that reflect the respective interest of those parties. Now, what is the relevance of equitable value? So, the selection of equitable value, that is particularly relevant in the context of a mergers and acquisition transaction, where the value of specialized plant and machinery, that is determined not just by a market condition, but not just by a market condition, but by the specific interest and motivation of parties involved in the transaction. And equitable value accounts for the synergies, strategic benefit, specific consideration that may not be fully reflected in a typical market transaction. So that is the reason, that is the justification why we are not going market value, why we are going by the equitable value. Remember again, foundation of valuation, basis of value. That will determine your professional judgment. That will determine what data, what information, what input you will collect for valuation, how you will arrive at the estimate. So this is the relevance of equitable value. Now, what are the challenges in obtaining a comparable market data? So several challenges were encountered during the evaluation process due to the specialized nature of plant and machinery and context of the M&A transaction. So a lack of direct market comparable, the specialized nature of the equipment combined with the unique context of mergers and acquisition transaction meant there were no direct comparable in the market. So, supposing if I give you the example in Kandla, Indian Oil Corporation, we have the LPG import plant, and that LPG import plant that store butane and propane. What are butane and propane? This is LPG, liquefied petroleum gas. So that we use as cylinder in our kitchen. So in India, we know it as LPG, but in internationally, in global market, that is either termed as the butane or a propane. And this butane and propane require storage in cryogenic condition. Cryogenic condition. So propane you need to store at minus 40 degree centigrade. Butane you need to store at minus 5 degrees centigrade. And at the time of dispatch, so storage is at minus 40 degree and at minus 5 degree. But at the time of storage, you need to dispatch the product at natural temperature. So you will appreciate that for a cooling of product, for a cooling of a product during storage and heating of product during dispatch. So that will need a specialized type of plant and machinery or equipment. And these type of machinery or equipment that will not be available in India and globally also, only a few OEM will be there, original equipment a manufacturer will be there that will have that type of technology. So I am just giving you the example how challenging the evaluation assignment is. So that lack of direct market comparable. Now, if you actually need to do the valuation of a compressor, which is or the heating arrangement, the boiler, which is commissioned in Indian Oil LPG plant at Kandla, that how you will get the comparable for that. So that is the actually challenge. So the specialized nature of the equipment combined with the unique context of M&A transaction mean there were no direct comparable in the market, and the available data often pertain to general purpose machinery which did not fully capture the strategic value of the asset to the acquiring a party. Strategic consideration, so value of plant and machinery in the context of M&A transaction, that is influenced by a strategic plan of the acquiring entity, which are not reflected in general market data. So when actually HDFC Bank acquired HDFC, so actually that was with reference to special consideration, because HDFC Bank is already in the business of commercial banking, and HDFC company, so that was in the business of providing finance to the housing. So these two can align, their interests can align. But other player in the market, interest of HDFC will not align with the Reliance Industries Limited. So that will have different consideration. That will have a different a factor which need to be considered in evaluation assignment. So each when we are talking about the identifiable party, so that will actually require a specific consideration. So these require actually the value of plant and machinery in the context of mergers and acquisition transaction that is influenced by a strategic plan of the acquiring entity, which are not reflected in the general market data. And these required the valuer to consider the unique benefit and synergies which are expected to be realized by the buyer and approach and a consideration. So given these challenges, evaluation was conducted by considering the following factor. Synergistic benefit. So equitable value was assessed by considering the potential synergy that the acquiring party expect to realize from the use of specialized plant and machinery. And that included the impact on production efficiency, cost saving, integration with the existing operation. So in our example, I gave you the example of a compressor which is used in a LPG plant. So if there is another company which is also engaged in storage of LPG, like Reliance Refinery at Jamnagar, so probably they will give a much higher price to that compressor as compared to other company. Compressor can be used for other purposes also. So other company, they may give less price as compared to the price which is given by the a company which is doing the similar type of business. So that is very important. Synergistic benefit. That is important consideration when we are doing valuation for mergers and acquisition transaction. Replacement cost adjusted for a strategic value. Very important. Cost approach when you are talking. So that is based on the fundamental economic principle of theory of substitution. So substitution that will involve finding out replacement price or reproduction price or reconstruction price, whatever name you may call that. That is ultimately the fundamental economic principle of theory of substitution. So replacement cost adjusted for strategic value. So while replacement cost was considered, adjustment were made to reflect additional value the asset hold due to a strategic importance in the M&A context. And that particularly relevant when a plant and machinery enables the acquirer to achieve the specific operational gain, specific operational goal. Consultation with the stakeholder. So when you are engaged in discussion with the key stakeholder involved in the transaction, including a management from both the acquiring and target company to understand the strategic rationale behind the acquisition and how the plant and machinery fits into those plans. And adjustment for obsolescence and economic condition, again, very important, particularly in case of plant and machinery, because as we all are aware, we are living in era of technological upgradation. What technology we had 5 years back and what technology we are making use of today, so that is having a sea change. So in that scenario, asset will become obsolete very fast. A plant and machinery costing 100 crore with an estimated life of 20 years as per the OEM, that machinery may become obsolete in a 5 year only because technology has changed and deploying old machinery may not be cost effective as compared to the new technology. So the adjustment for obsolescence and economic condition, very important as per the current market trend in development of technology. So the valuation accounted for physical depreciation, functional obsolescence, broader economic condition. However, adjustments were also made to reflect the enhanced value of the plant and machinery when deployed within the acquirer's operational framework. And conclusion, so based on the analysis of factor mentioned above, equitable value of the specialized plant and machinery as of the valuation date reflects the best available evidence taking into account the strategic consideration of the mergers and acquisition transaction, and that is consistent with the requirement of IVS. So approach taken recognizes the unique value that plant and machinery hold for identified parties in the transaction beyond what might be reflected in a typical market scenario. Typical market scenario. So that is how we need to incorporate detail for this particular component of the valuation report, basis of value. And this is just a suggested approach, taking a hypothetical scenario. And same way, now we will go through SFA evaluation. But before doing that, what I suggest, if it is convenient for each one of you, we will have a short break of around 5 minutes. For health reason also, it is not advisable to sit continuously at one place for a longer duration. So we will have a short break of 5 minutes. And prior to we do that, so any question on whatever we covered so far, or any expectation, any feedback about your expectation from this session, so that we can go accordingly in the remaining part of the session. So any question? I hope all of you are with me. So it seems no question from your side. So in that case, we will go in for a 5 minute break. So it is 11:32, and we will resume this session at 11:37. Thank you for your attention throughout this session. So can we start now? I hope all of you have rejoined. So, we will start from where we left actually. Just give me a minute. I will again highlight that. So prior to going into break, we covered this plant and machinery, equitable value, mergers and acquisition transaction. Now, many times questions have been asked. Am I audible? May I request one of you to please confirm that I am audible, na?
Yeah, yeah.
Okay. So many time questions have been asked in the past from where we can get the evaluation report for our guidance. And so I would like to highlight one fact wherever there is merger between two listed company, two companies which are listed on the stock exchange like HDFC and HDFC Bank. So if you are interested to know how the valuation of HDFC and HDFC Bank has been arrived at the time of their merger. So that is a public document because any public company that cannot keep the information of the transaction confidential. So you can access on internet the evaluation report which are published by the public company which are involved in mergers and acquisition transactions. So let me actually highlight that actually one or two such valuation report. So I will stop sharing this and let me first highlight that so that you can have an idea. So this particular valuation report is prepared by ENY. ENY, as you all are aware, that is one of the four big consulting firm, a global consulting firm, and GT Valuation. And this valuation was at the time of merger of L&T Infotech and Mindtree Limited. L&T Infotech Limited and Mindtree Limited. So how they have arrived at the evaluation. So that is a detailed document. We will not go through this, but through this description, you will learn many things. Through this description, so what I suggest, these old documents which I am highlighting just now, these are freely available on the internet. You can just search for that through Google search, or you can visit the website of L&T Infotech or Mindtree Limited. Mindtree is no longer in existence now. So you can actually you can get the information on that. So this is another valuation. So this is valuation at the time of merger of HDFC Bank and HDFC. So this is again done by the very serious, a very senior and experienced valuer, registered valuer. So you can go through this. Similarly, this is just a recent valuation. So this is between Tata company. One of the Tata company was involved in this. So this is again how evaluation is done. You can go through that. And this is evaluation under a SEBI regulation. So how that is done. So these all are a public document available freely on the internet. So you can very well access that entire methodology of valuation, like how comparable company multiple method is arrived, so that you can have a information on that. So I hope this was useful, getting a valuation report, because many time questions are being asked in the session, where to get the evaluation report. So this just I highlighted. Apart from that, you can get other evaluation report also. What I suggest, you can continuously visit the website of NCE, National Stock Exchange, under under the announcement, and in that you can have the details of mergers and acquisition, and you can get this thing also. Then actually the Sethi sir wants a link of this. So sir, if you find interesting, what I will do, I will actually upload one or two in chat box only right now, so that if you are interested, you can download that. So just give me a 1 minute, allow me a 1 minute. I will take just 1 minute. So this L&T and HDFC, this I have already shared in the chat box, so you can download that if you find that of interest. Another like insolvency or real estate billing. So insolvency cases, there is actually a suggested valuation report by ICAI valuation RVO, ICAI RVO. So just let me share that actually. 1 minute. Let me share CIRP, under a CIRP. So how you will do the, but take this as a suggested approach. I will again repeat each evaluation that is different. So you need to have different consideration. CIRP format suggested by ICAI RBO. I have attached in the I have uploaded in the chat box. Based on your need, you may download. Again, this all whatever I am sharing, that is available on the internet. So not a big thing in that. And one another query, as I can see in the chat box, that is in case of a registered document, registered value is always based on guideline value, which is mostly less than the market value. In that case, though we get document evidence, the true market value could not be found or justified. In that case, what we should proceed? So that only I highlighted when we were covering this basis of value for a land and building. So that is always a challenge, as I highlighted, getting the details of recently concluded transaction of a property, real property, that is always challenging. But you need to have actually the networking with the renowned brokers of that particular area, or you need to have actually networking with the builders of that area, or any sources of data provider. So that is how you can arrive at the evaluation, sir. Some challenges will always remain in evaluation. We cannot eliminate the challenges in evaluation. If the a degree of professional judgment is eliminated from the valuation, so nothing will remain. Probably through artificial intelligence, valuation report can be prepared in a very better way, efficient manner. So our need as human, as natural person in evaluation, that is to handle such type of situation also. So we need to be aware about that, sir. I hope that will give a reply to your query. Any further query, you are welcome to ask. I hope my screen is visible. Basis of value. So here what we have assumed for SFA evaluation, we have assumed that actually the principal company need evaluation of shares of a subsidiary company. So that will be as per the fair value as per the Ind AS 113. So you all are aware IFRS 13, International Financial Reporting Standard 13, or Ind AS 113, that is Indian Accounting Standard 113. These are on a measurement of the fair value. These are on a measurement of the fair value. So whenever you need the evaluation for the purpose of financial reporting, like reporting of investment value of a subsidiary company in the books of accounts of a principal company, you need to select or a choice of you that will be the fair value as per Ind AS 113. There you cannot select the investment value or liquidation value. So remember different methods of selection, basis of value. I will repeat: basis of value, foundation of valuation assignment. So the basis of value adopted for valuation of equity investment in the subsidiary, that is the fair value as defined by Ind AS 113. So fair value, that is the price. So as per Ind AS 113, this is the meaning of fair value. This is the definition of fair value. So that is the price that would be received to sell an asset or paid to transfer a liability. So remember, that is a exit price. That is not that is not the entry price, because that is related to sale of an asset, not purchase of an asset. So exit price, fair value is the price that would be received to sell an asset or paid to transfer a liability. Remember, market value as per Ind AS, so that was related to both transfer between buyer and seller. Here, what you are determining is exit price as per a seller, price as per a seller. So that is very important. You need to have actually concept clear about different basis of value. So fair value, that is the price that would be received to sell an asset or paid to transfer a liability in an ordinary transaction, in an orderly transaction where between the market participant at the measurement date. So a relevance of the fair value. So selection of fair value, that is particularly relevant in the context of financial reporting, where the value of the investment in a subsidiary must be accurately reflected in the apparent company's consolidated financial statement. So a fair value under Ind AS 113, that will ensure that valuation is consistent with Indian accounting standard and provides a market-based measure of value that reflect the current economic condition, So what are the challenges in a fair value? So several challenges were encountered during the evaluation process due to the nature of the investment and prevailing market condition. So if a company is a listed company, you will actually find it very convenient to make the evaluation. But if a company is a private company, so very challenging to do valuation of a private or non-listed company. So several challenges were encountered during the evaluation process due to the nature of the investment and prevailing market conditions. So what are these challenges? Limited market comparable. So subsidiary operates in a specialized industry with few comparable companies that are publicly traded, leading to a reliable leading to a reliance on input from fair value hierarchy, particularly level 2 and level 3 input. So if you refer to Ind AS 113, or IFRS 13 guidance provided under that accounting standard is actually related to use of level 1 input, level 2 input, level 3 input. So what are level 1, level 2 and level 3 input that we will see, but level 2 and level 3 are lower as compared to a level 1 input. So that is the hierarchy. Market participant assumption. So valuation requires incorporating assumption that market participant would make, including expectation about a future condition, interest rate, specific risk associated with subsidiaries operation. So these are the challenges under that what we have done. So to address these challenges, the valuation was conducted by considering the following factor using appropriate level of the fair value hierarchy. So we have a level 1 input. What is the meaning of level 1 input? Where available observable input like quoted prices in the active market, like Reliance equity share that is listed on the stock exchange, you will easily get the price of a share from the stock exchange. So observable input, that is level 1 input, observable input as quoted price in the active market for identical asset were used. So, however, due to a limited availability of the publicly traded comparable, reliance on a level 1 input was minimal. So, this particular subsidiary company, this was not a listed company. So, alternatively, what you do, you take actually comparable details of a comparable listed company. But in that, in this particular case, even the comparable listed company data was not available. So use of level 1 input in valuation that was ruled out. Now level 2 input, that is observable input other than quoted prices were utilized, like quoted prices for similar asset in active market or quoted prices of identical or a similar asset in market that are not active. So a valuation multiple like price to earning ratio or enterprise value to earning before interest, tax, depreciation and amortization metric, EBITDA metrics from comparable company in related industry were adjusted to reflect the characteristics of the subsidiary. And level 3 input, so due to a specialized nature of subsidiary, the limited availability of market data, unobservable input like the DCF analysis were heavily relied upon. So these analysis involve projecting the future cash flow expected from a subsidiary and discounting them to present value using a discount rate that reflect the subsidiary's risk profile and current market conditions. So assumption and models used in this analysis were based on the best available internal and external data aligned with the market participants' assumption. And subsidiary means a principal company is having the control over management of a subsidiary company. So you always need to consider a control premium in such scenario. So valuation considered a control premium reflecting a value associated with a parent company's controlling interest in the subsidiary. And this premium is particularly relevant when using the level 3 input as it recognizes the strategic influence and control exerted by the parent company over the subsidiary. And compliance with Ind AS 113, so valuation process adhered strictly to Ind AS 113, ensuring that hierarchy of input was properly applied and documented. Each input level was evaluated for its relevance and reliability with clear justification provided for any adjustment made to the observable data and reliance on unobservable input. So based on the analysis of the factor mentioned above, fair value of the equity investment in the subsidiary as of the valuation date has been estimated, and that value reflect based available evidence incorporating a mix of level 1, level 2, level 3 input as appropriate, and it's adjusted for a specific conditions of the subsidiary. So that approach taken is fully compliant with Ind AS 113 and provides a reliable and defensible evaluation that can be included in the parent company's consolidated financial statement. So that is the example of how we can have a basis of value adopted in the evaluation report. So with that, actually, I will conclude since time is over. But I also know we have not concluded all thing, but whatever we have completed, that is in greater detail. And if actually I get the opportunity, we will continue with this topic in some other session with more detail, because valuation report preparation, you will appreciate that that will need to cover entire estimation of valuation. So entire process of valuation you described in the valuation report, and that too for three different asset class. So you will appreciate that a time of 2 hours is limited for that. So given that limitation, whatever best input I actually I can give, that I tried and I have given that. I hope you found that useful. And with that, I will end here. And I will end here. And I thank each one of you uh, 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 for your participation in this session, active participation. And I also thank each one of you for your kind words through the chat box. So that will really provide me the encouragement. So with that, I will end here, and I will hand over to the organizer. So Kajal madam, you are there. Can we end the
Yes,
session?
sir. Yes,
But
sir.
prior to that, if
You are.
any question, so questions are welcome, as I can see through chat box. Whatever questions were there, I tried to address that.
Sir, I have a question.
Yeah, go ahead, sir. Go ahead, sir.
Okay. Sir, I am going through a valuation process in which there is a liquidation process, but
Okay,
I don't have any data from the client, and machines
okay,
are like very savvy conditions. There is a huge plant,
okay,
and
okay,
how to approach this? Because machines are laying down for many years. Some parts are missing, some are beyond recognition.
okay. So, sir, a liquidation valuation, I think that case is under IBC, Insolvency and Bankruptcy Code.
Hmm.
So, what is the meaning of liquidation value that is provided under a liquidation? What you need to derive is the realizable value. So, if you refer to, so your appointment is made during a liquidation process or CIRP process, sir?
It is for liquidation, sir. Pure liquidation.
So liquidation, so CIRP process, valuer must have arrived at the liquidation value. As you all are aware, under a CIRP, the two
Yes, sir.
registered valuer for each asset class are appointed to determine the fair value and liquidation value. So
Hmm.
you have a basis how the previous valuer, two in number, have arrived at the liquidation value during a CIRP. है ना,
Sir,
sir?
this is my first case.
I'm just
Uh,
telling
uh,
you. First
uh,
case, how to deal with, I am just informing you. So
yes,
you
yes,
collect the evaluation report from the liquidator. You insist, you provide me the liquidation evaluation report which were done by the previous valuer. So there you will find the details of liquidation value. Because under a CIRP, a valuer need to derive, estimate both fair value and liquidation value. Under a liquidation process regulation, you need to derive the realizable value. Now, what is the meaning of realizable value? That is nowhere specified under the International Valuation Standard or ICAI Valuation Standard. Anywhere it is not specified. So, you need to have your own judgment how you have derived the or estimated the realizable value. Now, realizable value is what? That is, you are selling those plant and machinery, on as it where basis. है ना? So, actually, you expect that the buyer will actually decommission the machinery and transportation also on a buyer side. Now, you highlighted these machines are not in operative condition. So, going by your judgment, going by your experience, what will be the estimated cost to actually bring those machine in the operating
Labor
condition,
condition.
in the working condition. Yeah, go ahead, sir.
Yes, sir. Sir, my problem is that some of the machines are in such a condition they are not recognizable. What
Not
machine is used?
recognizable. So best way actually to deal with is you estimate the scrap value, because if machines are not recognizable, so how you will make that machine a working condition? Hai. So if actually the prospective buyer, if he is not in a position to put that machine to its operational use, then best way is to dispose of that machine as scrap. So you
As a
give the
scrap.
full justification in your valuation circumstances, photograph you attach of the machine, and as a expert, as a professional, you certify this machine cannot be put to the operative condition as per my professional judgment, and therefore I propose to actually sell this machine as scrap, and this is the scrap value of the machine going by the estimated weight of this. Sir. So you determine, actually many machine will have some element of steel, a steel also of different types. So since you are technical person, you will know better than me. Some actually other metals will be part of that machine which are valuable, like use of means many have the use of what you call other metals which are precious in nature. So that you identify and estimate the value accordingly. So that is suggested way of dealing with it based on the preliminary information which you are sharing. Ground reality, your approach may be different, because you have complete details. So that is just suggested approach how to deal with that from my side, sir.
Yes. Okay. Thank you.
Any other questions? PPT I will forward to the organizer of this event, and whatever we covered that I will forward to the organizer of this event. And a PPT, as you know, I have not presented fully. So without presentation, it may not, but important portion from that I will definitely forward to the organizer of this event. So apart from that, any question? Thank you, each one of you, for your kind words. I am really obliged. So if no further question, then I will hand over to the organizers. So Kajal madam, are you there? Can we end the session?
Yes, sir. Thank you everyone for such a lovely session. Thank you, sir. And thank you all the participants to be your active listeners. Thank you all. Have a nice day.
Thank you.